Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, June 10th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. I'll start with the big picture and work my way into the day itself. Just a reminder that the long-term trend, the one-year trend as defined by this channel top, lower lows, lower highs, remains heavy, remains bearish, actually, below 216.09. It's not that I'm expecting longer-term bearish continuation. It's just that that is the path of least resistance. Actually, we could actually fall into the very low 100s again, as this channel bottom will be intersecting with the 101.81 January 23 low over the next couple of months. So, sell opportunity presents at 216.09 if tested. I'm not expecting it unless we were to close above, a channel top that is presently at 188.61. And that is a level that may well contain buying through June. Given the longer term bearish dynamic, this is your next sell opportunity, in my opinion, on a multi-week basis. And as far as reaching 188.61, that comes into play with this mid band of this channel top that today is at 179.06. So if you've been following the Tesla report now, for the last, the last couple of weeks, I've been mentioning how we've had this trend line off these highs that last Friday was at 178.25, as I recall. We did not close above it yet again. We did push through it again. But, when we look at the parallel structures that occur here, and these work out quite well. We sort of missed this one, quite frankly, as we were focusing on the trend line. The trend line worked. It's just that if you were a day trader, you had to endure some slippage against that position on an intraday basis, but we never closed above it. And so now we're slipping back, if you will, to the 179.06 channel band. It is parallel with the series of lows that occurred from February to April. It is part of the long-term channel top that exists at 188.61 on the daily chart. So 179.06, talking to day traders and 3 to 5 day swing traders, as I was using the same method on that trend line last week, can contain daily buying pressures, and below which 172.90 is in reach over the next day or two, and over the next several days we could fall to 167.43. This is the same dynamic we've been talking about for over a week now, where you are selling perhaps 179.06 and holding out for, maybe you're already short, maybe you're still short, holding out for, talking to 2 to 3 day swing traders, 167.43. Our dynamic into later week remains two-sided between 167.43 and the 179.06 channel band. I call these kind of it's an inside band that is parallel with the other structures. Downside today, 172.90, simple trend line off the lows, can contain intraday, possibly daily selling pressures. If we break or certainly close below 172.90, I would expect tomorrow a test of 167.43, where we can place a daily low and possibly bottom out here into later week, then anticipating a retest perhaps of this 179.06 descending mid-band or channel band. If we push through 179.06, 181.92 in reach today, and that's probably this could be about it to the upside. But I will say that closing today above 179.06, as I said earlier, does point the way toward testing 188.61 within several days. Wednesday, Thursday of this week, I would expect 188.61, where we could top out into July and fall away again from here. And as I mentioned a moment ago, it would be a settlement above 188.61 that would clearly define 216.38 as a 3 to 5 week or sooner objective. 216.38 is the same structure on the daily chart that I pointed to earlier on the weekly chart at 216.09 that can contain quarterly buying pressures, and we can fall away from here through the third quarter and into later year, falling perhaps back to channel support that, as I mentioned a moment ago, is converging with the 101.81 January 23 low anyway over the next couple of weeks. Not until we close, or if we close above 216.09, will my tune change. And then it becomes a more aggressive bullish dynamic into later year, the 320s, 330s, then anticipated within 3 to 5 months of closing above 216.09. So we have to get above 216.09 to indicate a good low for the year, bullish continuation then expected, probably another 100 points plus north from there as we move into the third, fourth quarter of this year. Until then, we're in this bearish dynamic below 188.61 as we move through July. We can fail from here, and holding below 179.06 will keep, as I say, the 167.43 formation in reach over the next few days. If we close below 167.43, and I don't see that happening today, but if over the next few days that does occur, that is entirely consistent with the sort of longer-term bearish structures that are existing on all the charts. And if we close below 167.43, 154.22 becomes the next 3 to 5 day target. So for you 3 to 5 day swing traders, it really is sort of go long above 179.06, expecting 188.61, where profits can be taken and a short sale made as we move actually into July trade. Of course, closing above 188.61, we have a 3 to 5 week buy signal, as I mentioned earlier, up to 216.38, where a long-term resistance can absorb buying into later year. Downside once again, closing below 167.43, 3 to 5 day swing traders play the short side down to 154.22 where profits can be made. And yes, we can bottom out here on at least a weekly, possibly monthly basis. We could round back up from here back into the 170s again within several weeks of testing 154.22. But closing below 154.22, I see no good reason to bottom pick Tesla as we move well into the third quarter. The following 1 to 2 months, I would expect that channel bottom that I mentioned earlier that is on the weekly chart, presently in the 120s, I believe, will be in the very low 100s over the next couple of months. And it coincides well over the next couple of months with that 101.81 January low. So, in terms of playing the short side longer term, on this chart, it is selling 188.61 on strength. That is your next decent 3 to 5 week sell opportunity, and that could materialize actually all the way into the later third quarter. Or you're selling weakness with a settlement below 154.22, and then we're expecting the low 100 area within a couple of months of doing so. If we close above 188.61, we have a counter trend rally. I call it counter trend rally, in my opinion, up to 216.38, where we can top out really possibly through the rest of the year. This would be a 3 to 5 week counter trend rally. Counter trend moves tend to fall short of their mark, oftentimes do. So while I would be expecting 216.38 as a target, I wouldn't be surprised to see the market fail on the way up. And we'll be watching that one day at a time, as we always have with the daily Tesla report. Is there anything else to say? I don't think so. I think I've covered it all. I will leave you with this chart for the day. That is it. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. We put out 2 stock picks every week. Lots of good stuff going on wickedstocks.com that you never see. Daily Triple Q, daily SPY analysis as well. I'll be back tomorrow with Tuesday's Tesla report, and you have a great day.